US President Donald Trump and tech billionaire Elon Musk exchanged criticisms on social media. The ECB's president, Christine Lagarde, says the Eurozone attracts more foreign investment and highlights inflation uncertainty. And the German Federal Statistics Office reports decline in exports and industrial output. This is the Economic Bulletin. I'm Henny Saif, and we'll start off with the Labour Department's Bureau of Statistics that has revealed that US job growth slowed in May amid headwinds from tariff uncertainty, while the unemployment rate held steady at 4.2%, potentially giving the Federal Reserve cover to delay resuming interest rate cuts for a while. Non-farm payrolls increased by 139,000 jobs last month, after rising by a downwardly revised 147,000 in April. The unemployment rate remained at 4.2% for the third straight month. The Commerce Department's Bureau of Economic Analysis has reported that U.S. trade deficit narrowed sharply in April, with imports decreasing by the most on record, as the front-running of goods ahead of tariffs ebbed, which could provide a lift to economic growth this quarter. The trade gap contracted by a record 55.5% to $61.6 billion. Goods trade deficit eased by a record 46.2% to $87.4 billion, the lowest level since October 2023. Imports decreased by a record 16.3% to $351 billion in April. Goods imports slumped by a record 19.9% to $277.9 billion. Exports rose 3% to $289.4 billion, an all-time high. Goods exports went up 3.4% to a record $190.5 billion. The Treasury Department has stated that no major U.S. trading partner manipulated its currency in 2024 in the first semi-annual currency report of President Donald Trump's new administration, although its monitoring list of countries warranting close attention grew to 9, with the addition of Ireland and Switzerland. The Treasury issued a stern warning that China, Japan, South Korea, Singapore, Vietnam, Germany, Ireland and Switzerland were on its monitoring list for extra foreign exchange scrutiny. In response, the Swiss National Bank has denied being a currency manipulator and added that it would continue to act in Switzerland's interests as the strong franc helped push inflation into negative terrain last month. It noted that it would intervene in foreign currency markets where necessary to keep inflation on track. The bank highlighted that it was in contact with U.S. authorities to explain Switzerland's economic situation and monetary policy. It further emphasized continuing to use interest rates and forex market interventions if necessary to pursue its inflation target of 0.2%. US President Donald Trump and tech billionaire Elon Musk have exchanged criticisms on social media, with Trump promoting his $1.6 trillion expense-cutting bill and Musk warning of a recession due to tariffs. Trump, posting on Truth Social, defended his legislation as one of the greatest bills ever presented to Congress. He also dismissed Musk's opposition, saying that he doesn't mind Elon turning against him, but he should have done so months ago. Musk, responding on X, predicted economic fallout from Trump's policies. Musk also announced that SpaceX would decommission its Dragon spacecraft following Trump's remarks about cancelling government contracts. On the U.S. relations with other countries, German Chancellor Friedrich Merz expressed extreme satisfaction with his meeting with the U.S. President Donald Trump, calling it productive and a good foundation for upcoming G7 and NATO summits. The two leaders agreed to strengthen cooperation on trade and other issues. Merz specifically discussed trade matters and tariffs at length with Trump, informing the U.S. President of Germany's readiness for a greater leadership role in future trade agreements. And for further analysis, we're joined from London, Massachusetts by Gianluca Lobefallo, the CEO of QW Capital. Welcome, Mr. Lobefallo, to Q News Economic Bulletin. How do you view the current tensions between Donald Trump and Elon Musk and their criticisms of each other on social media?
Hi, thanks for having me. Yes, obviously we can comment only on based on what we know, and as you know, when there are two, the contrast between people of this level, we only know what they want us to know. So I really believe there is a hidden fight between the two that for us is very difficult to comment. But standing on what we know, obviously we stated in the obvious, say there were two people with too big ego, so a fallout would have happened sooner or later. Having said that, clearly to me there is a point of a relationship with China. For Musk, China is a super important country for production and for distribution of his product, mostly on Tesla. And China is obviously standing a bit on the side after the apparently not so went well call with Trump the other day between Trump and Xi Jinping. So it's not clear where the US administration is going with China in the short term. I think that is creating tension between Trump and Musk more than the SpaceX program, the Dragon that you mentioned that apparently has been revised, so water it down. I doubt something will affect SpaceX. Don't forget the biggest contract of SpaceX with the US defense were granted during Biden administration. So they are previous to Trump. They were established. They are now the biggest contractor of the US defense, and NASA is SpaceX. Mm-hmm. So I doubt this one will change because of the quarrel between the 2 mm-hmm.
So do you think that these tensions could go beyond criticism on social media? Do you foresee the situation escalating further? And if so, then to what extent?
Okay, so now we are at the Shanigan level, right? So we are at the point in which there's been all this back and forth, and then Trump coming down on this question, and as well yesterday Musk with Bill Ackman get involved. Me at the moment is very too early to foresee any possible consequences. Having said that, during this situation, you can have unintended consequences. That's the clear problem. I mean, I'm pretty convinced that all this tariff rule negotiation and escalation tend to target what is really important for the US, that is a way to handle their debt. They have 7 to 8 trillion of debt to be refinanced over the next 3 months. That's the biggest problem they have at the moment. Obviously, that's why they're not talking so openly about it, apart from some declaration by Scott Bessent, the U.S. Secretary. That's the key problem they have. That's what they're working on. That's at least I'm pretty sure on closed door. And obviously, we have to look through the lens to understand what they're doing with China, to understand what they're they are trying to do with Europe. Today, the meeting with Merz, as you mentioned, from the German Chancellor. So that's where game and that's where the relevance, at least to the mid to short term. I think this is at the moment can be classified as shenanigan between two big ego people, and that could have that we knew it would have happened. Don't forget, Musk has never been a loyal Trump from day one. In 2016 and 2017, he was harshly criticizing him. So they found that common ground, but it's not a loyalty, long-term loyalty that's been tested. So I'm not surprised that these things happen now. Does this is going to change the stance the U.S. administration has versus China, has versus Europe? I doubt. So we have to see. It's a very volatile and continuously developing situation.
Mhm. Well, sir, how could this bill, the one big beautiful spending
Yeah.
bill, impact the business leaders and entrepreneurs in the United States?
Yeah, all is key is to understand if we have two views now. The US administration is saying this is going to reduce the deficit. Observers saying this is going to increase the deficit. And we're not talking about different in billions or in tens of billions. One is claiming we're going to reduce by 1.6 trillion the deficit. The other one are claiming is increasing the deficit by 2 trillion. So unfortunately, the divergence is massive. Don't forget that, just to give you an idea, the US GDP is 27 trillion and the US debt is around 34, 35 trillion. So 2 trillion is a massive number. And so almost 4 trillion difference between different previews of the US administration and the external observer is still a big number. So we have to try to understand what really is going to happen, because obviously they have this now debt ceiling they want to eliminate. That doesn't sound promising. That's why you are seeing that the long-term rates is going higher, because the bond vigilantes, that basically simply mean the market is reacting to that, rejecting at the moment and saying we wanted to be paying more to all the US debt. So the term premium is going higher. And that's what is a signal, is a message that has to be listened.
Mhm. So, how could these tensions potentially affect the performance of Musk's companies in the stock market, and would it have an effect on the general investor sentiment in the American market?
But the market react badly yesterday, as you know, on Tesla, and then during the overnight there was a mild recovery. Now, on the single stock, or could be Tesla particularly, all the conglomerate of Musk, for in the short term clearly cannot have a positive impact. But what is more concerning, apart from the shareholder of Tesla, is what would be the impact of the whole market. And obviously, if we are going to see a constantly higher level of rates, above all in the 10-year plus, or whatever is a maturity of more than 10 years, this will dramatically impact all the multiple in the US, because in the market, as you know, all the price earnings, all the expectation of profitability in the future are based as well on what is the interest rate at which you discount your future cash flow. So it goes without saying that if an interest rate found a higher plafond, not only they will impact the refinancing of the US debt for the US administration, and so negative for the market in the first place. But then all the multiple on which we base any evaluation for any stock will be negatively impacted. So yes, it can have a negative impact, but not just to the Musk company. There would be a minor issue. The bigger issue is for the whole market.
Mhm. Well, what about Europe? I mean, based on Christine Lagarde's recent statement about investors' trusts in Europe, do you think investors now are increasingly turning to Europe as an investment destination?
It is happening now. Is that I wouldn't see a link this directly to what happened to this shenanigan between Trump and Musk. Obviously, it was too recent. We are seeing a constant flow and more interest of European investors repatriating part of their investment. Don't forget that the non-US investor reached a peak in US assets of 19% in the first quarter of 2025. So we have the maximum amount, historically, of non-US investors investing in US. So part of that arguably is from Europe, and we can assume that first we may see a repatriation of that. And then, yes, US strategies start to mention in the European investment as a possible destination for part of their capital. All key in Europe is to prove that Euro can be united. So we all go back to a usual theme that if the Europe can prove to be a more liquid market, a deeper market through, for example, Eurobond issuance and not just differentiated European bond markets or government from different countries by a unique market much deeper, then yes, Europe can eventually be an alternative to the US Treasury market in terms of liquidity and depth. In this is the case, consider that actually the rating is higher, for example, for Germany versus US, and the rates are below, that can start to become an eventual alternative in terms of risk-free rate. But that's all go through Eurobond market.
Mm-hmm. From London, that was Mr. Gianluca Lobefalo, the CEO of QW Capital. Thank you very much, sir, for your insights. And moreover, in Asia, US President Donald Trump has said that trade talks with China remained on track and were in good shape, adding that he expected to go to China at some point. He added that Trade Representative Jameson Greer, Treasury Secretary Scott Bessent, and Commerce Secretary Howard Lutnick would meet with top Chinese officials. Additionally, on Truth Social, Trump announced that his conversation with Chinese leader Xi Jinping had a very positive conclusion. He noted that the conversation was focused almost entirely on trade. Nothing was discussed concerning Russia, Ukraine, or Iran. The U.S. Treasury Department has reported that the Bank of Japan should continue to proceed with monetary tightening, which would support a normalization of the yen's weakness and rebalancing of bilateral trade. In its exchange rate report to Congress, the Treasury Department noted that Japanese government investment vehicles, such as large public pension funds, should invest abroad for risk-adjusted return and diversification purposes. It added that it shouldn't target the exchange rate for competitive purposes. In response, Japanese Finance Minister told a news conference on Friday the government leaves monetary policy decisions to the Bank of Japan. And moving on to the latest developments from all over the world, European Central Bank President Christine Lagarde has stated that the Eurozone appeared to be attracting more foreign investment recently, in a sign that investors are increasingly confident in Europe's economic outlook. During a regular press conference after the bank's latest rate-setting meeting, she added that the outlook for euro area inflation is more uncertain than usual. Lagarde expected growth to be increasingly supported by rising government investment in defense and infrastructure over the medium term. She also highlighted increasing trust in the euro, pointing to a significant rise in reverse Yankee bonds, capital inflows as clear indications of investor confidence in Europe.
Could put the outlook for euro area inflation is more uncertain than usual. As a result of the volatile global trade policy environment, falling energy prices and a stronger euro could put further downward pressure on inflation. This could be reinforced if higher tariffs led to lower demand for euro area exports and to countries with overcapacity rerouting their exports to the euro area.
Hi, President Lagarde. I have a question. When I read through the communiqué today, I have the
rising government investment in defense and infrastructure will increasingly support growth over the medium term.
Looking both at the core and the headline forecast and your expectation potentially for a structurally stronger euro.
You know, the reverse Yankee bonds significant increase that we have seen in the last few weeks is a clear indication that there is trust in our system. The capital flow that we are seeing as well, whether it is European investment returning to Europe or a bit of non-European investment coming to Europe, all that is an indication that at least market forces, investors, those who move real money around, actually see value and have confidence in Europe.
The German Federal Statistics Office has reported that exports and industrial output fell more than expected in April as demand from the United States decreased following months of strong purchases in anticipation of US tariffs. German exports fell 1.7% from the previous month. Exports of goods to the US fell by 10.5% compared to March, while exports to other European Union countries rose 0.9%. The Statistics Office also said that German industrial production fell by 1.4% in April month-on-month. On a positive note, the German industrial orders unexpectedly rose by 0.6% month-on-month on a seasonally and calendar-adjusted basis in April. In Asia, Chinese Foreign Ministry spokesman Lin Jian has stated that the market will always be a magnet for foreign investment, whatever challenges may appear in the external environment. He added that in the first 4 months of this year, China's trade in goods saw a 2.4% year-on-year increase, with April's growth outpacing the first quarter by 4.3 percentage points. Jian emphasized that unilateralism and protectionism are unsustainable, and efforts to create walls and barriers will not hinder China's commitment to open cooperation for shared development. In Northern America, the Bank of Canada has held its key benchmark rate at 2.75%, citing the need to probe the effects of U.S. trade policy, but said another cut might be necessary if the economy weakens in the face of tariffs. Bank Governor Tiff Macklem stated that the trade conflict initiated by the U.S. remains the biggest headwind facing the Canadian economy. He also described U.S. trade policy as highly unpredictable. Macklem further noted that there was a clear consensus to hold policy unchanged as the bank gains more information. Elsewhere in Australia, Trade Minister Don Farrell has highlighted that Australia offers a secure alternative supply for critical minerals vital to industry in the face of rising concerns about Beijing's dominance of the sector. Farrell noted that Australia can be a safe and reliable supplier into the supply chain for critical minerals around the world. He added that it does not want to just dig and ship the minerals and aims to process them locally as well. Farrell mentioned that this would require foreign capital from outside such as the EU, the US, Japan, South Korea, Singapore and India. He further stated that critical minerals could end up in a free trade agreement with the EU that Australia and the bloc are trying to revive. And in the Middle East region, the General Authority for Foreign Trade has conducted a virtual meeting with the World Trade Organization to prepare for the 2025 Regional Trade Policy course in Saudi Arabia. Deputy Governor Nasser Al-Duwaither led the discussion, focusing on enhancing cooperation, course quality, and specialized workshops. This initiative aims to strengthen understanding of the WTO protocols and reinforce Saudi Arabia's role in regional trade. These are all the news that we have for now, but here's a reminder of today's main economic stories. US President Donald Trump and tech billionaire Elon Musk exchanged criticisms on social media. The European Central Bank President Christine Lagarde says the Eurozone attracts more foreign investment and highlights inflation uncertainty. And the German Federal Statistics Office reports a decline in exports and industrial output. This concludes our economic bulletin for now, but please don't forget to follow Q News on YouTube, Facebook, X, Instagram, and TikTok at Q News EGY to stay informed. Thank you for watching and stay tuned for more updates here on Q News.